Are you ready to take control of your financial future? Are you tired of being held back by bad credit? Well, I've got some good news for you. It's time to unlock your financial freedom. In this video, we're going to break down simple steps to boost your credit score and take control of your financial destiny. We're going to dive deep into practical tips and strategies that you can start using today. Get ready to say goodbye to credit worries and hello to a brighter financial future. Paying your bills on time might sound like a no-brainer, but trust me, it's the cornerstone of a good credit score. Think of it like this. Every time you make a payment on time, you're basically telling lenders, hey, I'm responsible, I keep my word. And guess what? Lenders love that. They see you as someone they can trust. On the flip side, when you're late with payments, it sends up red flags. Lenders start to worry if you'll be able to handle their money responsibly. So make it a habit, set those reminders, and watch your credit score climb. Now let's talk about those credit cards. Having credit cards can be convenient, but you gotta use them responsibly. One of the biggest factors that can make or break your credit score is your credit utilization ratio. Don't be scared off by the fancy term, it's pretty simple. It's just how much of your available credit you're using. The golden rule here is to keep your credit utilization below 30%. I know it's tempting to jump on every credit card offer that lands in your mailbox, but hold your horses. Opening too many new credit accounts in a short period can actually hurt your credit score. Why? Well, every time you apply for credit, lenders do something called a hard inquiry on your credit report. They're basically checking you out to see if you're a good risk. A few hard inquiries here and there aren't a big deal, but a bunch of them in a short time can make you look desperate for credit, and that can make lenders nervous. Moving can be stressful enough without having to worry about your credit score. One simple mistake a lot of people make is forgetting to update their addresses with their banks and credit card companies. Listen up, this is crucial. If you've moved and haven't updated your information, you could miss important bills or statements. And you know what happens when you miss payments? Bam! Your credit score takes a hit. In today's digital age, it's easier than ever to keep tabs on your finances. Make it a habit to check your bank and credit card accounts online regularly. I'm talking at least once a week, folks. Why so often? Because keeping a close eye on your accounts helps you spot any suspicious activity quickly. We're talking about catching fraudulent charges, identifying errors, and basically staying one step ahead of any potential problems. Okay, let's talk about those dreaded delinquent bills. We've all been there. Life throws curveballs, and sometimes we fall behind on payments. But here's the thing. Ignoring those past due notices won't make them magically disappear. In fact, it'll only make things worse. Those unpaid bills can seriously damage your credit score, making it harder to get loans, rent an apartment, or even secure a job in the future. Your credit report is like your financial report card. It's a detailed record of your borrowing and payment history. But just like any report card, there's always a chance for errors to slip through the cracks. That's why it's super important to review your credit report regularly, at least once a year, to make sure everything is accurate. You can get a free copy of your credit report from each of the 3 major credit bureaus: Equifax, Experian, and TransUnion. Dispute them. Look, I get it. Times can be tough, and sometimes you might find yourself in a situation where you can't pay your credit card bill in full. But here's the thing. Even if you can only make the minimum payment, do it. Making at least the minimum payment shows lenders that you're making an effort to pay back what you owe. Plus, it helps you avoid late fees and those nasty penalty interest rates that can really add up over time. Your credit limit is like a fence around your credit card spending. It's the maximum amount you're allowed to borrow at any given time. Now here's the deal. Going over your credit limit is a big no-no. It's like kicking sand in the face of your credit score. Lenders see it as a sign that you're not managing your finances responsibly, and that can seriously damage your creditworthiness. Remember that golden rule I told you about earlier? The one about keeping your credit utilization below 30%? Well, let's dive a little deeper into why it's so important. Think of your credit limit like a pie. When you use a small slice of that pie, say, less than 30%, it shows lenders that you're using credit responsibly. You're not maxing out your cards, and you're not desperate for credit. Building a solid credit history is like building a house. It takes time, effort, and consistency. The longer you have credit accounts open and in use responsibly, the better it is for your credit score. Why? Because lenders like to see a track record of responsible borrowing and repayment behavior. They want to know that you've been playing the credit game for a while and that you're good at it. Having a diverse mix of credit accounts is like having a well-balanced investment portfolio. It shows lenders that you can handle different types of credit responsibly. Now, I'm not saying you need to go out and open every type of credit account under the sun, but having a mix of credit like credit cards, installment loans like car loans or student loans, and maybe even a mortgage if you own a home, can give your credit score a nice little boost. I hope these tips have empowered you to take control of your credit score. Remember, a good credit score is your ticket to financial freedom. If you found this video helpful, give it a thumbs up, share and comment it with your friends and family, and hit that subscribe button for more financial wisdom. And be sure to visit me at leroyabrown.ca for more insights on achieving your financial goals. Until next time, remember, you've got this.